Good
Cool.
afternoon, everyone. I'm William Asai Renchi, a training coordinator at the Temple Small Business Development Center. The Temple SBDC helps small businesses start and grow through our no-cost consulting, webinars, and training programs. We are proud to be part of this nationally accredited network of SBDCs with over 1,000 centers across the US. You have joined us today on this webinar on the topics, stacks and such, ideas on pairing up your financing to get your deal done. A follow-up email will be sent to all attendees within the next 2 business days with today's materials. All attendees have been muted. However, we encourage you to post any questions you may have in the Q&A and chats to be answered by the presenter. Now I will turn over the floor to Ray.
Okay. Thank you, William. Glad to be here. Again, like William said, this is Stacks and Such, ideas on pairing your financing to get your deal done. I am super stoked to be here presenting this to you. We'll go over this in a little bit with our presentation, but long story short, I do have a bit of a history as it regards government finance. I had been a commercial lender for a very long time, and I actually have a background in economic development that's spanning almost 20 years, which is awesome for me to relate to y'all. But I'd like to give it, you know how it is with Zoom calls and doing things virtually. Sometimes we experience our share of technical difficulties. So if I could just ask y'all to give me like a couple of minutes, I'm pretty sure that we're going to end on time just fine, but to just allow that element of grace as we foray into this presentation, I would very much appreciate it. But yeah, I'm really excited to be here for all of y'all. Um, Fun fact, I'm very much one-on-one with clients, so I don't have a lot of opportunity. And I really love to do this, right? But I really don't have a lot of opportunity to do presentations for folks. And especially in a situation where I get to present on something that's kind of, for a lack of sounding corny, kind of like near and dear to my heart, right? Because I've done commercial lending, I've been banking for a while. So I'm excited to share this information with you for sure. Let's just give it another minute. As William said, feel free. I definitely welcome comments in the chat, so feel free to share as we go along. Just looking, I am not just looking off in the distance. I actually have two screens going on. So if I'm looking away from the camera, as it were, that's the reason why. Alrighty. Well, it's been 2 minutes. Let's get into stacks and such, all right? Again, my name is Ray Hayden. I am a business consultant and actually the capital acquisition specialist at the Temple SBDC. Let's go right into it. Before we delve into the whole capital stacking situation, I thought it would be appropriate to share a little bit of information with regard to the Temple University SBDC. We've been here for a while. Fun fact, I was like a year old when the SBDC at Temple was incepted. And I wanted to share a little bit about what our objective is, right? Is to help folks like you, folks that are actually starting a small business, or maybe you're looking at a situation where you're already in small business and you're at the point where it's like, oh gosh, now I need to figure out strategies to help myself grow. Maybe I need to scale. And that's kind of, it's not kind of, that's precisely what we're here to help y'all with, right? Very much, we are education oriented. One of the things that I'll share with you is that there are 15 centers within the Pennsylvania network, and they are all housed in colleges or universities. And that, I think, articulates the commitment that what we do is very much an educational resource. All right. A little bit about how we're funded. One thing to share with y'all is that our services are at no cost to our clients. Maybe an exception would be, say, if we're hosting like a webinar, and maybe it's like a ServeSafe webinar or something with QuickBooks. We are pretty upfront about that being an additional cost. And generally, because of our mission, also, they tend to be very much within the realm of reason. Our educational events tend to be rather affordable for our clients. Here's some fun facts, right, about stats, if you will, about starting a new business, financing that is procured, the sales that clients, small businesses in general, realize. Okay. And I think that especially as you're embarking on this journey, say you're new to small business ownership, um, I think these are relevant, impactful, hopefully meaningful stats for you to reflect upon, right?
Hello, Ray. I
Yes.
think your screen, you're not sharing your screen now.
Is it still not sharing or I'm sorry
Yeah,
about that. All right. Sorry guys, take two. Um Go into the share mode. All right, William. Does that
yeah,
help at all?
yes, perfect.
Yo, sorry about that. That's a bit of a bummer. Alrighty. And now it's in like operational mode, correct? William, can you see my full screen or is it still a little
Yeah, change
wonky?
it to the other one. Okay,
How's that
perfect.
look?
Yeah.
All right, awesome. Guys, never able to foresee or forecast every single like technical snafu as it were, right? But let's go through, if you don't mind, a little bit about what I was telling you about, okay? The stats below. Uh, and I don't think we came to this screen just yet or this slide just yet. So I want to share a little bit about what we're able to help y'all with, okay? Um, Oftentimes we're known for business plans, right? Especially from a startup perspective, or if you're looking to expand into something new, a business plan is very relevant. But these are the other things that we're able to help y'all with. Graphic design, we actually have a logo clinic at the Temple SBDC. It's a great value, $200 for a logo. Awesome stuff there. Legal formation, sometimes that's something that clients will sweat, right? Oh, I want to start a new business, but what's the entity that makes the most sense for me in order to protect myself from a legal and tax liability perspective? And we can have those conversations. That being said, the one thing that I will share with y'all is that we're really not the resource for legal advice or tax and accounting advice. So in situations like that, certainly have the discussion with a consultant, but ultimately it probably will make most sense for you to seek out those resources individually. And if you have a situation where, because these sorts of things can get kind of expensive, right? Let us know, and we might be able to hook you up with, say, legal clinics or partnerships with an accounting firm that's able to offer you pro bono advice. Okay. A lot of things that we're able to do have to do with the things that small businesses sweat on the daily, even if it's from a more preliminary perspective. Okay. And you'll see that with the various bullet points that we have here. I am a big fan of lending in the sense that that has been my bread and butter for a very long time. So, as the capital acquisition specialist at Temple, if you're in need of counseling from that perspective, I really, really like to be involved with that, and I really like to work with clients with regard to that matter. I had mentioned things as it regards to webinars. Sometimes there's a cost, sometimes there's not. There should have been no cost for this one. The clinics, like I mentioned, for tax and accounting advice. Research sharing friends. I will tell you this about the SBDCs in general. Sometimes we are not the only resource that you can tap into. And as we have those conversations, right? We might be able to hook you up with somebody that would be a better fit for you, or somebody at the very least that we can kind of like pair up with to give you the best technical assistance and counseling as a small business owner. Alrighty. I generally I can be a little bit of a control freak, full disclosure, and I'm definitely that type of person that likes order. Okay, so as a result, I have put together this agenda for you. Um, in the spirit of full disclosure, I am a bit of an introvert, to be completely honest, right? So while I will do a bit of an overview of me, while at SBDCs, it's relevant and actually just presenting in general, it is relevant to share a little bit about background, a little bit about perspective and experience. Oftentimes, not oftentimes, I would say more often than not, you're looking at some sort of level of credibility from folks that are sharing experience and information with you. And to be completely honest, sharing a little bit about oneself as the presenter here helps to build that credibility. But like I said, I'm a little bit of an introvert, and it's not exactly the most, shall we call it, comfortable situation for me, but I'm happy to do it, and you will see me do it throughout this presentation. I had mentioned that I'm a bit of a commercial lender. Um, Maybe we'll consider myself a former commercial lender, but I worked really hard, to be completely honest, to amass this knowledge. And as a result, I like to keep up with it, and I like to share it where I can. When we talk about stacking, capital stacking in particular, I want to share with you a couple of things, and we'll go over this within the presentation that you should keep abreast of, mindful of as you're talking to lenders, all right? Um, it's very much, this industry is very much risk averse, um, risk management related, and that's kind of where the disclaimers come into. All right. I want to give you an overview as to what I'm talking about with regard to capital stacking as well. That will be part and parcel of this conversation, where the stacking comes from, various sources that ostensibly you can leverage on when you're planning for financing whatever the need is for your operation, okay? Um, it's really hard, right, to just talk about things in generalities. So I thought it would be really good for me to share a couple of things. Let's call them case studies that I can share with you. Um, Kind of like a disclaimer version 2.0, some things that you can expect as you're going through the capital stacking process, in addition to my version 1.0 stack disclaimer, there are limitations. I'm not going to lie to y'all. Sometimes stacking might not be for every specific business owner, right? But it's always good to know what your options are, what those could be, right? I always like to share or save a little bit room for Q&A. And then once that's done, again, this should be about an hour-long presentation. Um, I'll let y'all go. Alrighty, so going into the next slide, the overview of me. Probably the most uncomfortable 30 seconds of this presentation. Fun fact, y'all, I am new-ish to being a consultant at Temple. I've been here for about 8, 9 months. I have lived most of my time in Pennsylvania, in rural Pennsylvania, central Pennsylvania. So it's a very new experience for me to embark in the city of Philadelphia and be part of such a major metropolitan area. Y'all, the traffic here is a real situation, and I learned that very, very fast. And what I will say is, though, I am new to Temple. I am not new to consulting, and I'm certainly not new to the SBDC network. This is the third center that I've worked for. Prior to this, I was at Wilkes University, and just before Temple, I was at Bucknell. And overall, this spans almost a decade's long history of being a consultant at the SBDC. Another fun fact about me is that while I serve in a business capacity as a consultant, yes, I've had a lot of years in government, finance, and community and economic development in general. What I will say is that I do have a diverse background, and I hope that serves you all well. Um, Undergraduate in political science and Spanish, master's in business administration, which actually worked really helpfully political science and business when I entered into that realm of government finance. And then most recently, I was actually able to secure my doctorate in education at Wilkes. So that institution where I first forayed into my history with the SBDC. And I will tell you this, one of my passions is education, especially from an adult education perspective. And that's probably one of the reasons why I'm totally stoked to present to you guys today. All right. And like I had mentioned before, capital acquisition, primarily associated with my background, is a specialty of mine at the SBDCs, in addition to helping folks out with business consulting, things like the business plan, market research, things of that nature. We, like I had mentioned before, are very much in existence to help small businesses. Right? With that being over, I will tell you this, these two disclaimers. Please keep these in mind, all right? Banking and lending, financial services, very much. Um, there's a saying in this industry that these institutions cannot eliminate risk. All they can do is minimize it, all right? And oftentimes, when you're having these discussions and the spirit of negotiations with these folks, right, they're going to come back to you with a couple of answers, or they will preface their answers with these two these two phrases, okay? And part of the reason is that this realm can be a very complicated, right? Can we offer you financing? Sure we can, but it might depend on these various factors, okay? So, lender one, you can lend us money for small businesses, and that's awesome. And very often, look, I used to do this myself. You might get a response like, we can. However, these are the various situations that you have to keep in mind, okay? Sometimes it can be, I'm not going to lie to y'all. Sometimes this can be very, very like not satisfying responses, but they are part and parcel. And if you can just take these in as realities for your experience, I think the easier the experience can be. Not to say that it's an impossible or an awful experience. I really don't think so, but I think it's very important to manage your expectations. And honestly, that's part of the reason why among the first like couple of slides, this is why I'd mentioned this, all right? Let's go into what capital stacking is, all right? When you get right down to it, different loan programs, it might not all be by the same lender, right? You might need to leverage off of a couple of organizations or institutions in order to realize your operation, okay? But these are the various aspects, these are the various purposes where you might see capital stacking. All right. Another thing that you have to keep in mind, I had mentioned risk a couple of times, and these are the five, what we call them C's, on which lenders predicate their lending decisions. So essentially, the short of capital stacking, it's not going to be one loan, it might be a couple in order to get your deal done. Okay. With that second point, yes. Why, yes, you did see something about the five C's. And I want to go into why that's still relevant. Maybe you thought you would just have this conversation about capital stacking. Let me go into what those five C's are, if you don't mind, okay? So on the left here, you see collateral. Essentially, if you've ever been that person, that's a lot of us, right? I'm a homeowner myself. Um, Perhaps we have a couple of homeowners in the group also, right? You secure a loan to purchase your personal residence. What is the collateral for that loan? That is your personal residence that secures the loan, right? And there are a lot of things that folks sweat when pledging collateral, okay? When collateral is pledged as an asset to secure a loan, that means that that loan is encumbered. So what does that mean, right? Well, your probability of being able to pledge it again and put it up for collateral, maybe with the exception of real estate where, and to a certain degree, business assets, where there might be, we call it equity, right, into that asset. where that's available, you might be able to pledge it a couple of times. And that's usually on real estate called second mortgages or a third mortgage or a second lien on business assets, things of that nature. Okay. The second C that we'll talk about is, or that I'll at the very least mention very briefly, is conditions. All right. Um, One of the things that I like to share, let's just say, for example, your business makes the best typewriters of all time, and they're super reliable. And as a result, like nothing goes wrong with them, and you can create them in like 5 minutes, and like almost in real time, you have this product for a client, right? And that sounds super awesome, like on the surface. But like, can you think of like the last time anybody has like really used a typewriter? No, not really. It's kind of like an obsolete technology, right? So you might be the best at something like that, right? But frankly, if the conditions aren't there, then um it's not, I hate to say it, I hope nobody here is making typewriters, but it's really like not the best business model. All right. Other conditions to take into consideration. Some folks as consultants will have somebody say something like, oh, I'm going to establish like an arcade, right? And the reason I'm establishing an arcade is because in like my area is because nobody else, it's going to be like the only arcade ever, like within like a 20-mile radius of the location. And that sounds really awesome on the surface. But frankly, um, what we like to do also as business consultants is take into account um, what other competition might be, what we could perceive other competition might be, right? So, yeah, you might be the only arcade, but let's just say there's a movie theater down the street or there's a bowling alley, and those are all examples where where customers, rather, prospective customers might be separated from their money, and ergo, that is um, that is an exemplification of competition and how you need to still be deliberate about your competitive advantage, all right? Industry trends, for example, let's just say you're starting something like, oh, I'm trying to think of a really good example, right? Let's just say it's something like we're looking at a like a paint and sip, all right? Where folks are there, they learn about art, they learn about technique and things like that. But and this isn't necessarily the case. This is just an example. But let's just say if folks are leveraging off of actual art institutions as opposed to something a little more intimate, right? And that's an industry trend. That's something to overcome. Or maybe it's a situation as a small business owner or somebody that's looking at owning a small business, maybe we pivot to a certain degree, right? Other things to take into consideration. One of the things that I talk about all the time as a lender is capacity, all right? Um, Oftentimes folks will be like, oh, I have plenty of capacity because I'm making like a bajillion dollars in sales, right? Um, That's awesome, and I'm very happy for you. But if you have a bajillion dollars in expenses, or if you have like a bajillion dollars in debt, right, and you're over leveraged, that damages your capacity. And when we look at things from a financial perspective, we have to look at both sides of an equation, right? Yeah, I'm doing great with sales, but if you're not doing so great with controlling your expenses, that is going to damage your capacity. Capital. Oftentimes, folks will try to borrow because, like, they just don't want to spend their money. That is not oftentimes a workable strategy, okay? I'm going to be honest with you. There is a saying in lending, right, where lenders will request something called skin in the game. And like I kind of struggle as a lender and in economic development with that sort of saying because like when you say things like that, well, first off, and I try to be really like sensitive to small business owners or those looking to embark on this, because for a lot of y'all, this is not a game. So like the parallel doesn't resonate so great, right? Um, this is a livelihood for many of you. This is a vacation for many of you, right? And then when you say things like skin in the game, like I just having these conversations with clients, it's almost like it resonates from them. I wouldn't say resonate, but they envision like this idea where it's like, well, if I have skin in the game, that suggests that, like I could get hurt if something bad happens. Um, and that's kind of hard to hear. I think after doing this for as long as I have, I can be like a little protective of clients, and that's something that I don't want them to feel or don't want them to um, see as they're embarking on something like this, all right? But I think it's important to maybe reframe the idea of skin in the game. When you are putting your own money, and again, this is very much a requirement for a lot of lenders, um, it's not just demonstrating that you can get hurt if something goes wrong, okay? Um, but you should really put your money into something that you believe in, right? And that, honestly, when you have that commitment, um, well, first off, it articulates credibility and it articulates belief in what you are pursuing is meaningful and you really do believe that it's going to work. And when you think about things from that perspective, um, that we want to see that belief in you, that we want to see as lenders, um, that this is something that you really, really think it's going to work. Um, it's not like unfeasible. It's not like unrealistic. It's not a situation where you should feel like we're asking too much or that asking too much, there's something to be asked too much of you. It's really just kind of, um, again, just putting your money where your belief is in this particular regard. This is the last C, y'all, is something as a lender that I feel like I just cannot, like, there needs to be an aspect of character. And I feel like this is my philosophy from a lending perspective that everything flows down from character, okay? The other C's. If you have the experience, if you have evidence through your character that you've really deliberated on your new business, right? Or this expansion project, then your character flows through with preparation, all right? Maybe you've gotten your credit in a good place. Maybe you've accreted the capital requisite to realize this expansion or start your new business. You've realized, the job experience, for example, right? To actually inform your ability to do this job that is a small business owner. So that's a thing. And it's not just, look, we've all kind of like made like mistakes in life, right? And that's not necessarily, I wouldn't say that is something that would be a hindrance to character, right? Oftentimes what we experience, and I have it right there as the second bullet point, what we experience actually advances our character. We learn from our mistakes, we learn from our experience, and that is something that builds us up. All right, I'm going to take 3 seconds to see if there are any comments. It looks like there are no comments. Um, one thing I really wanted to say, darn it, I really wanted to make mention of this earlier when I started my presentation, but I want to call into attention how we're able to provide programming. And yes, we get our funding from our three main sources, but we are very much an institution that is centered around education. I had mentioned that. Part of the reason why I have this presentation today is I don't know if he's here, but Brandon Green is one of our student workers, and he helped me out tremendously with putting this together. Um, like just not even a long time ago, he was working through this for me. And to be completely honest, what we're able to do as an SBDC, I mean, I'm just going to say it like this. We rely on our student resources. I have my graduate assistant here, Samir, um, in attendance. So I wanted to take a beat really quickly just to say Any students that are, William, you included, but any students that are here, um, and support, the staff at the SBDC, like the consultants and stuff. Thank you very much. We do not deliver programming as well as we could without you. So that's awesome. Let me allow that shout out to all of them in particular. Y'all, I did mention 5 Cs. It does not, maybe for a lot of you, resonate entirely super awesome, right? With how this deals with capital stacking. And I wanted to address that. Yes, um, these are ways that lenders predicate their decision-making process as to whether or not we should be granting you money or not, right? When there is a shortfall, and I can't say that capital stacking is a panacea for every um, 5C, right? But when there is a perception, when there is an element like, oh, well, maybe something might not be entirely right, oftentimes that's where we see one of those capital programs in place to help our clients. I'm still going to say that character, you still need to have that element of character. Yes, and cash, it's that saying, cash is king, right? But there are times where, let's just say you have that cash, but gee, like I really need to reserve that cash because I'm concerned that I need to be capitalized appropriately for this new endeavor. We can bring on these sorts of programs to help you out and to ensure that you have appropriate capital reserves, right? Or that maybe we're borrowing a little bit more in order to ensure that you have those capital reserves. One of those things, let me see, does anybody have any questions? Not just yet. So what I wanted to do as a result is, yeah, it's great to talk about capital, right? And how we can stack stuff up in order to get your deal done. But it's a little, I guess, unsatisfying if we don't discuss the various programs that are in place. All right. You'll see that, spoiler alert, that two of the programs that we'll be discussing are actually funding partners to SBDCs in general. And the first one is the SBA. So, federal monies, right? The SBA has two different programs, generally speaking. Okay. Now, the first one is through banks. And the way that it works is that what banks are lending out is their own money. All right. But let's just say it's a situation where it's like, oh, I'm a bank and I want to do this deal, but I'm not entirely comfortable with it. Or maybe there is something about um, there's something uncertain about that deal, right? And there will always be an element of uncertainty, risk, right? With regard to banks. And what they'll do is they'll leverage this 7A program to ensure that there is a guarantee. Long story short, let's just say I'm a bank, I'm doing this loan. The loan is going to carry what's called a 7A guarantee. That means that as a bank, so long as I didn't mess up my due diligence process, the underwriting and things like that, right? If the loan goes south, they're guaranteed a certain percentage of their monies back, all right? And as a result, that like induces lenders to take on deals that they might not necessarily um, go with, right? Or maybe it doesn't fully meet with the risk appetite of the institution, all right? So it can be standalone. But oftentimes, and especially if you're pursuing a 7A loan through a bank, they're going to look for some level of capital injection into it. All right. So, and that's usually what I've seen 10%. Simple example, $1 million project. I have $100,000 to put into it. $900,000 can come from a 7A guaranteed bank loan. All right. Any questions on that? All right. The second one is actually more near and dear to my heart, and that's the 504 loan program. When I was telling you a little bit about my history working with SBA, being in government finance, one of my jobs was administering the 504 loan program, all right? And when we talk about it, what we're looking at financing is something called fixed assets. I'm sure most of you are familiar with the concept of fixed assets. But it would be things like real estate or things associated with real estate. Let's just say it's renovations to the real estate. Um, or it's machinery and equipment, the actual like real stuff that you need in order to do business, right? I mean, I guess you can say that like inventory is also like real stuff, but that's more within the realm of like like you would use working capital funds to purchase inventory, for example. All right. Um, that also means that 504 can't be used for intangibles, things that you can't touch. I mean, when you take like a definition version of what that means, what can't you touch? All right, so licenses, right? That's not really like some, I mean, I guess you could take like touch the paper that like the licenses are on, but you really can't touch a license, like a liquor license, for example. Goodwill, that would be something that's intangible. A client list, that's also something that's really considered intangible. And the one thing I will also say about 504, I'm not sure actually, now that I think about it, if I've reflected this in my presentation, but when we do capital stacking, that's part and parcel to an idea of a participatory lender, okay? What does that mean? A lender might participate in the project, but they can't finance all of it. And be honest, that's essentially the 504 program. All right. The SBA, by way of a certified development company, will step in, administer the 504 program, but that does not necessarily mean that it can finance it alone, right? You'll need something that certified development companies refer to as a third-party lender, normally a bank, a credit union, things of that nature, that'll come in and finance 50% at least, normally it's at least 50% um, of a total project cost. All right. Go with an easy example, $1 million project. Oh, I'm looking at purchasing commercial real estate property. It's going for $1 million. Your third party lender will be in what's called a first mortgage position for a 504 project. And the certified development company will administer the SBA 504 loan and come in at max at 40% of the project cost, so $400,000. And the anticipation, of course, is that the small business owner would be on the hook for $100,000. All right. I'm going to be honest, like with regard to SBA programs, they will finance a lot, so long as it relates to small business ownership. There are some things that are off the table. If you're looking at like a gambling enterprise, not a thing. Um, if you're looking at passive income, and I'm not sure if everybody is on the up and up with what that means, right? But let's just say your sole source of income is strictly just collecting rent off of tenants, that's not going to fly in the eyes of the SBA. That being said, um, it's not to say that there might be space for you to have a tenant rental aspect of the commercial real estate that you're buying, but that can be very technical, and it's best for you to talk to me or your consultant or certainly your lenders about those technicalities, all right? But anything that's kind of from a more investment perspective, right, is not going to fly with the 504 and SBA in general. When I say things like speculative, all right, so let's just say, oh, I see this great piece of land and it's like an acre and a half, and I want to buy it, but I'm not entirely sure what I want to do with it, all right? We're speculating on that, right? And the SBA, generally speaking, that won't fly. If you're looking at, say, purchasing land, and then there's an element which the SBA 504 loan program, because it is fixed assets, can be a part of, and we are looking at like campsites or building upon it, then that would fly in the eyes of the SBA, generally speaking. Alrighty. Like I had mentioned before, the first two examples here are with our funding partners. The Commonwealth of Pennsylvania has the Pennsylvania Industrial Development Authority, or PETA for short, and they provide loans to small businesses. All right. There are a couple of nuances to it. Generally, it's maxed at 50%. There are appraisal requirements. There's something called loan to value, right? So generally speaking, the PETA program, their loan cannot be, and loan to value, just to explain that, that's a ratio, right? Loan divided by value, usually an appraised value or the value of the collateral, and it cannot exceed 80 to 90%, all right? Those are the various operations that PETA can service. I will say that for service-oriented operations, they need to be in specific areas within the Commonwealth, and those loans are generally limited to no more than $200,000. The nice thing, and I got to be honest, I used to administer these programs too, and the state, at least in my experience, has been very no. I don't know how much people really believe this when I tell you folks, but to be completely honest, they are very, very helpful staff. They've been very, very proactive staff in terms of getting deals done. And I think that when you work with government programs, sometimes you can get into the mindset, or it doesn't maybe have like the best, um, I guess, reputation for, really bringing their all or trying to work things through responsibly, of course. But I just want to say I've really had good experience with the state. And there's a lot to be said about these programs, right? A junior mortgage position, so they don't have to take high priority on the lien position. Um, they don't. If you want to pay this, let's just say you're doing really well and you want to pay this puppy off. Um, they're not going to penalize you for it, okay? There are some things that you have to take into consideration. After 3 years, you have to commit to certain job creation retention criteria, and after 3 years, yes, you do have to meet them. If not, there is a penalty. For the various things that you need to refinance in order to get yourself started, the PETA program is a reasonable option for you. The one thing I will say is you can't refinance with that program, but it's not necessarily, and I have an example for this, it's not necessarily that we can't consider PETA in tandem with a refinance. Alrighty, a couple of other things. Seller financing. All right, friends, I will tell you this, that as a business consultant, and especially with a lot of a certain demographic, like baby boomers, for example, who are looking to retire and are looking to sell their business, right? Seller financing can be in the deck, in a manner of speaking, right? But there are some couple of things. We had talked about a couple of different lenders and the capital stack and the mortgage positions on collateral, or the lien positions, we'll call them, on collateral, all right? At the very end of things, that's generally where sellers will find themselves. So if they're looking at taking collateral for a project, they would have like the most junior dibs on being able to reclaim things, right? There are specific thresholds, like IRS has specific interest rates that the like minimum interest rates that seller financing um, needs to be, and we can comb through those details if that's something that you're looking to negotiate, say, with the seller. There can be term thresholds as well. Oftentimes, when you're capital stacking, capital stacker, I'm willing to do this for like and offer you a term for 15 years. There might be programs, and that had been the case with the SBA for a long time under certain circumstances where the seller has to be in for as long as the term. All right. 10-year term for machinery and equipment, seller has to be in for 10 years as well. Okay. Um, there's a lot of detail when it comes to these programs, and I'm going to be honest with you, sometimes it's not entirely uncomplicated, and that's kind of like where it makes sense for you to really have these conversations with your business consultant and certainly your lender as you foray into this realm. All right. I do feel that just because folks are looking to retire, and I had mentioned this a little bit earlier, that we might see a little more in the realm of seller financing, okay? But it's something that's certainly negotiable, or at least something that can be mentioned when you're at the negotiating table. And oftentimes that seller financing, especially when you're looking at conserving capital, can get the deal done. All right. And I will say one thing, it's a little bit left of the capital stacking um conversation, but there is a saying. Um, I've been like doing this for a while, like I said. And back when I was a lender, there's like this saying that a fair deal is a deal wherein both parties walk away slightly dissatisfied. I think there's something to be said about that, okay? As you're entering into these things and you're negotiating terms and conditions, because just coming with seller financing, that's just buyer-seller transaction. Um, as you're working through things, um, it might not be the worst idea ever to have that perspective in place that yes, you have expectations, and yes, you'd love to go things the way 100% that you'd want them. But as you are negotiating with people, that's not necessarily going to be the case, right? There might be, let's call them concessions that you have to make. Yes, I want to get rid of my business. Yes, I want to sell it. But in order to do that, like, what are the various aspects that I have to take into consideration in order to get it done? I want to buy this business, right? But maybe wouldn't it be nice if you could just have one loan just to take care of everything and it's just one and done? Um, but that's not necessarily the case, and that's part of the reason why it's almost like part and parcel of managing your expectations, where you have to take into consideration your options to get the deal done. And even if it's not exactly what you wanted, almost anything, right? Like in life, that might not be the case. But if it's enough to get things done for there to have progress realized, um, I think it's important to reflect on whether or not that's good enough for you. All right. I had mentioned things can get complicated. I did want to forewarn you. I've forewarned you a couple of times. I do want to go into some examples for you guys. I did want to also share with you some of these points, okay? Like, it's hard to amass, like, SBA standard operating procedures, y'all, is like 500 pages, right? So it's hard to fit that into like an hour's worth discussion. And sometimes it's just easier to go through examples, right? I had mentioned the whole primary lender situation. Again, let's keep that in the back of your mind that you have to leverage a couple of folks, and there is usually a lead lender in place. It can be technical. I apologize for that. It's just the nature of these programs, all right? Um, with regard to what we're discussing also, let's be honest, like, and I totally look, I took a very long time to get like really knowledgeable, beyond familiar, but like knowledgeable with this stuff. So that I don't expect y'all to um to remember or to fully like get the gist of everything that we're discussing. I'll do my level best to kind of explain it. But again, that just gives more validation for you to work with a consultant and to have these discussions with your lender. All right. Capital stack example one. I know that that's a paragraph. I try not to put a lot of text, but frankly, for a lot of you, this might be like one of your only case studies, so to speak, that you'll be reviewing as you embark on capital stacking. All right. And I wanted to give you this example. Also, fun fact, these are all projects that I worked as a lender. I may have changed some of the details because another fun fact is that we really do prioritize client confidentiality. So I really didn't want to get too specific, too detailed with the examples that I provided. And yes, with the SBDC, but honestly, the whole banking realm in general. Capital Stack 1. We were looking at a gift shop. These are the various things that we were looking at financing, okay? So that's a bit of a mix, right? Already, when you look at things that are specific to working capital, um, this kind of tells you that if we're going to be implementing like the SBA 504 loan program, it cannot finance everything. All right. This was a situation, the person was looking to retire. They were happy with just the sale of assets in general. All right. Savvy client, right? Oh, I have enough money, or I have money to put towards this, but I'm really worried about making sure I'm capitalized appropriately to get this puppy done and to start off on the right foot. As another note, I digress a little bit, but that's one of the things as a lender that I worry about with my clients is making sure that you have appropriate collateral. And I'll be honest with you too, that probably trickles down from my experience as an SBA lender because that is something that they also sweat, right? So a lot of that informs this financing structure, okay? I broke down with these various bullet points as to what we're financing. And then on the second slide, this is the various use of funds. I had mentioned that the 504 cannot be used for intangible assets working capital, all right? So we leveraged what was called the 7A Community Advantage Program. And in this particular example, the certified development company that was able to do the 504 program also participated in 7A and was able to provide this client with the requisite working capital. The client had their capital to begin with. Didn't I say something about preparation and how that's an articulation of character? Even if it wasn't everything, there was still an element of preparation that is articulated in this example, okay? And then we'll see here that we implemented a third-party lender as well as a certified development company to facilitate the 504 loan program. All right. So here, if you think about it, we have like four different um exclusive of the down money. Um well, I guess the working capital. So let me walk that back. We have three different capital sources from which the client was able to leverage off of in order to get the deal done. All right. Just by nature of this, you'll also see that this was a startup, right? That's something to take into consideration. A change of ownership. Um, I'll go into another example, but that generally flags it as a startup operation. Alrighty, capital stack two. All right, now we're looking at a manufacturer. Um, a lot of this has to do with fixed assets, which would suggest to me that there could be a 504 component to it, right? Remember that this is very much a capital stack, so we're going to be looking at various ways to get this financed, okay? Um, Here's a fun situation. There was a I should have bolded that, darn it. But there was a refinance of existing debt, okay? And oftentimes with capital stacks, that can complicate matters. Um, we have a client that is a long-standing business owner and has a wee bit of cash to put towards to this project. This is the breakdown of the uses of how that cash should be used or was to be used. And then here is how we went through it. Y'all, I know it's a lot of information, and that's part of the reason why I have these bullet points. I believe that y'all are going to get this um, slide deck after the presentation, but at the very least, I'm going through it, but you can comb through it at your own pace, okay? And these are the various programs that we used. Economic Development Administration was part of the purchase of equipment. The client leveraged some cash, okay? And the neat thing is, there was a refinance aspect to it, but there was cash out. All right. So in this scenario, $200,000 needed to be refinanced, leaving $150,000 or 50% of the project cost for renovations, to fund those renovations. Um, PETA can be in a project for 50%. All right. So that cash out matched the 150,000 that represents PETA's 50% contribution. Okay. And there are a couple of things that we had to take into consideration. When you see something or if somebody talks about monies from the Economic Development Administration, get a handle, or what we really should be doing is getting a handle on that administrator's like appetite to use those monies for like renovations. Okay. And that's part of the reason why this was separated out. All right. When EDA is used for renovations, they have to abide by Davis-Bacon. Prevailing wage, long story short, the folks that work construction need to be paid a specific wage that is fair. Okay. That can be a hardship for lenders. And oftentimes they're like, we're just not going to do that. All right. And we'll just carve that out and we'll look at financing something else. All right. And that's essentially what happened here. Okay. The refinance, but we're not counting the refinance as matching funds. We're counting the cash out as matching funds. And that's how we were able to get around with this capital stack and bring on PETA, which again does not do refinances. All right. Um, a lot of detail there. Okay. And you'll see here that with the EDA, that was a $150,000 equipment purchase. This fund required a 50% match. The EDA fund required a 50% match. The client was able to put together $15,000 or 10% of equipment cost. And the folks that administered the EDA program were like, you know what? With so much money coming from the bank and with so much money coming from PETA, um, we consider that safely your match. All righty. Right? I just saw somebody that wanted the slide deck. Let me tell you, I do not blame you at all. Last one, and then we're almost done. The capital stack for this was strictly, if I recall correctly, an SBA loan program, but this was 504, but this was split between two different uses, equipment and real estate. All right. There are a lot of detail to this. Okay. Now, I told you that a startup cannot, that renders it a change of ownership, or rather, a change of ownership renders it a startup. Pardon me. All right. But there are a couple of things that our client did this time around. Existing machining company set up a new existing machining company. All right. Had the same NICS code, North American Industrial Classification Systems code. Long story short, 6-digit code talks about, it's all about identifying sectors, okay? So same NICS code, um, same ownership, okay, in the business, all right? Um, Machinery and equipment, real estate, so 504. The client was involved in seller financing. This is what the deal looked like, and this is how we broke out the structure, okay? Again, anytime you see third-party loans, we're looking at a bank or a credit union or something similar, generally speaking, okay? And we'll see here that there was a seller financing. So in this is a little bit of a unicorn, okay? Oftentimes with projects, there needs to be skin in the game. And ultimately there was because the client shelled out a ton of lump money for closing costs, okay? And I made that argument to the SBA. But here we have seller financing. Um, both cases, one for real estate, one for equipment, okay? Um, a lot of this, I'm going to be honest, was driven by the bank. Everybody, like banker wise, definitely sweats risk. And it's a hard thing to ask for lenders to tie long terms with assets that don't last that. Like, can you imagine taking out like a car loan for like 25 years, right? Like, and a lot of lenders take that into consideration and won't grant that, or the spirit of like not granting that, right? Um, yeah, a startup, but because of those facets in place, new LLC, same ownership structure from the old LLC, same NICS code, um, that sort of thing, we could get by with the SBA to say that it's not a new business. All right. Old business had to pledge a corporate guarantee, but that's a technicality maybe for another time or for something that's more one-on-one. Um, in this case, there was seller financing. I had mentioned things specific to um, seller financing in terms and conditions and when that's allowable. SBA is one of those situations. Friends, I will tell you this also that there have been a lot of changes to SBA guidelines, standard operating procedures, and one of them has to do with seller financing, okay? Whereas I could have provided all the seller financing as a lender as equity, now it's only 50% of the seller financing requirement. And the seller will also have to be on full standby for the term of their seller financing, okay? So it's not until like the SBA gets paid until the seller gets paid. And that's a major consideration now with the changes in guidelines when we're talking about seller financing. All right. Any questions so far? Guys, we are at the end of our presentation. It's a little complicated, isn't it? It's not impossible. Friends, like oftentimes small business is not what am I trying to say? Like these programs are designed for small businesses, right? So while it seems like it's impossible or it's a lot of detail, you're relying on your lender to figure out a lot of those details, but there is nothing wrong with being aware and educated to know what to expect and what those confines, what those restrictions are. It's also kind of incumbent on like your consultant to help with the guidance as it regards these two, right? I got to tell you, there are some examples that are more complicated, some that are less complicated. It is like a whole spectrum as it regards capital stacking. And regardless of whether or not, let's just say you've studied this on your own, I would still caution you on knowing every single nuance or thinking you have every single nuance. Um, Understood. Because frankly, I'm just going to be honest with you. There are times where, like, the lender might not be aware of certain things that can be done with these programs, right? Capital stacking is definitely an asset, right? How can capital stacking be an asset? Frankly, it depends, right? Um, Character, as I've said before, is a non-negotiable. Um, Experience, connectedly, I feel there are certain things that need um to be shored up as it regards that, okay? Can you finance 40% of a project through the SBA? Yes, but it also depends, all right? Like if you're a startup, that dips more to like 30%. If you're an industry that is environmentally sensitive, that can dip down to 35%. If you are a startup that is involved in environmentally sensitive, this, that, or the other, that can dip down to 30%. All right. So it depends. Can it better put your position as a small business owner? Yes. Here's the thing, you still might have to put cash into it, all right? There is still collateral that's going to be a requirement. It might be more than project assets that your lender is going to want to look at as collateral, all right? So these are all caveats that you have to take into consideration, expectations that need to be managed as you enter into the negotiation process, all right? It's a lot of information, y'all, right? But I hope that you also understand from this that things can be in place to help you get there. Um, it might take a little bit of work, it might take a little bit of research, but that's also part of the reason why the SBDC exists, because we do serve as an asset for technical assistance and counseling in all sorts of manners, including things related to capital. All right. Lenders are at the forefront of these programs. Always good to maintain those relationships with them and to also seek out, get knowledgeable. We can even offer referrals who might be the major players, who might be the players in terms of things like a 7A loan or folks that bankers that regularly partner with other institutions that offer, these programs for capital stacking. It's not impossible, but it's not always easy. And as you pursue this, make sure that you're doing like an honest inventory as to whether or not this is the right situation for you, okay? Because I'm going to be honest, it can be a lot of paperwork, right? So you have to have a lot of patience. And you have to have a lot of management of expectations and be open to questions, right? As this program, um, um, as you look to apply for these programs, rather. Alrighty. Um, and with that being said, here's another thing, folks, and I know we're a little bit after time, but please, like, um, I took a lot of time to learn these sorts of things. I hate the idea of losing a skill that I, amassed. And if it's a situation where you'd like to have a conversation, feel free to reach out to me, even if you do not belong to the Temple SBDC, which is right now Philadelphia County. Okay. But if there's something that you want to talk to me about, I do have my contact information on this last slide. We're over time, but honestly, I can hand back a little bit if anybody has any questions. All right. And William, I saw that you have the survey there. Friends, I will also tell you this, that because there's so much information, and this is actually something that I've done with other, or that I've experienced with other webinars and stuff like that, right? As a good business consultant, it's so much information, and sometimes it's not until like 5 minutes after the presentation is done, right, that the questions start to formulate. Or maybe it's reviewing materials or doing research on the internet. And this is not the only time that you can have questions, right? Or that you have to think like off the cuff. So please reach out to your consultants. And thank you so much for your time. It was a pleasure being here for y'all.
Okay, thank you everyone for joining us today. And thank you, Ray, for presenting today.
Okay.
As Ray said already, a survey for today's presentation has been posted in the chat box. We value your feedback, and it's also required by our funders to continue to provide these no-cost webinars. A follow-up email will be sent to our attendees within the next 2 business days with today's materials too. Have a nice day, everyone. Bye.